Hello, everybody. Today is it's Monday, March 6th, and it's 11 p.m. Eastern Time. It's only about 6 p.m. here in Hawaii. I'm recording this video at the request of a number of subscribers who would like to see a hypothetical performance report for the auto trader. So that's the purpose of this video, is to show some hypothetical performance results. Before I continue, first, the required disclaimer, which is relevant to this video in particular, since we will be showing some back-tested results. Okay, so it's important to point out that simulated results do not represent actual trading. Since the trade's not been executed, the results may have under or overcompensated for the impact of market conditions, lack of liquidity, simulated trading, and so forth. So this chart has been refreshed, and when we refresh our charts, there will be an H next to the trade. The H means that it was a historical trade. So I made a screenshot before I refreshed the chart. So here's a screenshot of the same chart. Notice there's no H before the trades, and these are actually how the trades unfolded today. So in contrast to looking back, our entry was the same. Since that was a limit order, that's exactly the same, 2371.50. And that's one of the benefits of using limit orders in backtesting. We get some degree of accuracy on the results. However, our exits are slightly different. The first target should be the same, but this is where we get some difference on our exits. Here we show in real time an exit at 2376.25, and that was the same because that's a limit order. But we show our entry on the short at, it's a tick better on the refresh chart. It's actually 2374.75 in real time, and here it's a tick higher. But the real discrepancy comes on this exit and reversal. So in real time, here's what happened. This trade exited up here at 77.50, and then the entry was on the next bar at 76. And looking back, we show the exit at 76.50, which is a point less, and then we show the entry on the next bar at 76.75, which is the same, although it occurred on the next bar since we're using limit orders. And then it was a tick off here. So all in all, what that resulted in is, in real time, we had a loss of 175, but looking back, we had a loss of only 50. So the reason for that is if I make these bars open, low, high, close, and I make them a little bit thicker here, what happens is the close of the Renko bar is here, and the open of the next bar is here. But that's not the way it really occurs in real time. The close of the Renko bar here, the opening price of this bar is actually the same as the close. And same on the next bar. The close of the bar here is at the low of the bar. The open is not here. The open is down here, and so forth. And that's why these trades may set up differently when we're looking back hypothetically. Because we're using limit orders, our targets are usually right on, as is our entries. As you can see, there is absolutely no difference in our entry price and our exits on the first winning trade. We got the same exact prices. And again, there's an H next to the trade when we refresh the charts. If I bring the equity curve real tight, we see a really nice looking equity curve. So let me get over to the performance report and let's take a look. Okay, so here's the performance report for that E-mini S&P chart, which is actually pretty conservative. This starts trading at 12:30 noon and trades to the close. This is Eastern Standard Time. So this is only allowed to trade the second half of the day, starting at 12:30. So it's allowed to trade for about 3.5 hours. And we have a modest goal of 750 daily profit target and 750 loss limit. It's important to trade with a loss limit so you don't have runaway losers. So here is our equity graph. And we have a really nice equity graph. It's showing hypothetically that we made 16,000. This is only 2 contracts on in 90 days. This is going back about 100 days, so a little better than 3 months. 16,000 in profit. Here's the summary. We have actually 15,325. And we have the profit factor here. What this is this means that it made $2.43 for every dollar it lost. It made 243. So this is a very good, very strong profit factor. We had 245 total trades, and 127 were longs and 118 a short. That's very good. That's a very good balance. It shows the system is not trading too much on the long side or the short side. Our winning percentage is 67%. And again, we see a pretty good balance between long and short trades. Since the bias in the market has been up, there's a little more long trades, but it's still a very good balance here. Since we don't have any slippage, we're using limit orders. The average trade of 62.55 is very good. And here we have the number of consecutive winners and consecutive losers. This is also very good. 16 consecutive winners, only 6 consecutive losers. That's something you can live with. Up here is the drawdown. Here it's showing 925. I think this is being generous. It's probably a little bit more than that in reality. But it's hard to tell because this is not an exact science when we look back hypothetically. But this can give you some reasonable idea, understanding that it's not 100% accurate. You have to allow some room for error. So here's our drawdown graph. Because we have a 750 daily limit, you can see there's just a couple of times it went over that, probably just maybe because of a spike. But most of the times it was way under our 750. In fact, the average drawdown would be this line, which is not that much. On this scatter graph, we're showing our entry efficiency. So this is showing an entry efficiency of 75%. That means the placement of our order was very good. 75% of the time we were able to get most of the profit from the swing and exit. This is a bar graph showing the monthly net profit. And since it's the beginning of March, we only have a few days here. Trade.